Hello, good evening. Today I am with Mr. Himanshu Sharma, Certified Financial Technician and Chartered Market Technician Level 3, founder of Chartered Private Limited in New Delhi, India. I want to talk with him about what happened now in financial market from the world, India and Indonesia. So at the first, I want to say, how are you, Mr. Himanshu Sharma?
Yeah, I'm always fine. Like, glad to connect with you. It's been a long time that we are interacting together. So, thank you for giving me the opportunity, and I will be sharing my thoughts for whatever we can do for the financial community. So, I'm fine. I'm
Okay,
fine.
good.
Thank you.
Okay, so in the last 2 weeks, maybe we get a lot about the collapse in United States and in Switzerland about the three bank like SPB Financial Corp and then Credit Suisse in Switzerland because of the liquidity problem. So from the technical analysis view, how about the financial sector in United States? Maybe you can share with chart or maybe up to you. What can you share with us?
Uh, like in see when we always look to invest in a sector or a stock that is in an uptrend, that is from the technical analysis point of view, number one point. So anyone who is holding on to a stock that is in a downtrend is inviting those negative surprises as always. And I have seen hundreds of cases before where you get these kind of news, negative news, when the stock is already in a downtrend. So there is a book written by even Sir Stan Weinstein, Secrets for Profiting in Bull and Bear Market. On it, you do not have to do some rocket science stuff. Just open the weekly chart, just apply that. Maybe I can share my screen with you.
Okay,
So
go ahead.
if
Yes,
you
sure.
so you have to allow me to share my screen because it's disabled.
Okay.
Okay, so if you visit the charts of these banks like SIVB from Nasdaq, SVB Financial Group. So you see here that I have a template set here, the 40 MA. So this is the 40-week moving average. So whenever it is sloping up, that means the stock is in an uptrend. So
Yes.
this 40 MA guides us towards which stock is in a downtrend or which stock is in an uptrend. So now you see clearly, even before this drastic fall of 60 to 65% in a week, even before this, the stock was clearly in a downtrend. So when you are holding a stock that is already in a downtrend and informed insiders have already taken their exit from these banks,
Yeah.
so then you are preparing yourself for these negative surprises. As I said before, negative surprises are of two types. One is the price shock, which is kind of act of God to which everyone is unaware of. And the second negative surprise is these kind of situations when informed insiders are already aware of these situations. That's what we study in our technical analysis through price and volume chart. So any stock that is in a downtrend, so I can open plenty of charts for you. All the banks, you name those banks, and we see the charts. So JP Morgan, it's clearly now breaking the 40 MA, and it really never caught a trend. So if you see here the long-term chart of JP Morgan, it was never in a smooth uptrend except this phase of this time. Except that this was a COVID fall, and compare it to other stocks that have moved 400, 500% post COVID, this was almost sleeping nearly about the pre-COVID level. And now, if you check the Credit Suisse Bank, Credit Suisse Group, New York Stock Exchange, so see here now, even before this
Oh,
drastic fall of 57% in this week, the stock was clearly in a downtrend. So now you see here, you see exactly when the 40 MA started sloping down. It was here
yes.
and the price breached. And barring this one false breakout, apart from this scenario, the stock never came back to the same level. So if you are holding the stocks that are in a downtrend, now coming to your question about financial sector world over, if you see even in Indian market, even in emerging markets, banks are now at inflection points. They are very critical. They are at very close to those critical support zones, and the risk of meltdown is very high. And so far, waiting on the sidelines is the right approach, as per my opinion.
Maybe you can select the financial sector fund XLF, United States.
Yes.
Yes. Let us see. XLF. ETF for
So we have like
is that
ETF for
yes for the index financial sector index for United States, maybe. I don't know. Is that
Yes, there is a ETF, but I don't exactly remember the symbol name. In
at
India, we usually have the Bank Nifty. For Indian market, we usually have Bank Nifty. So that is in a very dire state so far. I will open that. I have those stocks list with me. So this is the state of banking sector in India.
how
So
about that
comparative.
in India? Is that good?
So
Oh,
many stocks are now sitting very close to the breakdown region. So they have to bounce back up to show any strength. As for now, they are very weak. Most of the banking sector stocks, the leaders are weak. So even in PSU banks, even in private banks, the structures are broken in some places, and at some places they are very. I mean, I am staying very cautious in them. They are very close to the breakdown point, very close. So I think waiting on the sidelines is the better option right now.
okay, okay.
Hmm.
Can you see Indonesian banking, IDX Finance?
So
IDX,
IDX Finance,
yes.
this one. What's the symbol for it?
Without space, IDX, yes, finance,
Finance.
yes.
Okay. All sector. IDX Finance. Okay. Oh
Yes.
yeah, correct. So so you
What
see
is it?
here, even so it's in a clear downtrend now. If you ask me, it's very near to the support region somewhere here around
So
1300
very
and
dangerous.
very dangerous state unless it crosses above 1450. But yeah, I think it should spend some time now here to form a base, because if it moves up just right now, it will face the selling pressure immediately from the trapped buyers of the past. So as far as my opinion goes, it should be spending some time here to form a base and then break out for any strength. So as of now, it will be a clear avoid for me.
Okay.
Obviously, there may be some pockets. There may be some pockets because anyway, index is just representation of the stocks. So that's what I believe, that there may be some pockets in this banking sector where maybe one or two banks like Mandiri or Bechia,
So
maybe if
let
I
us
check their
see.
charts, they
Let
may
us
be.
see Mandiri maybe BMRE. Let us see.
Yeah, so bank, yeah, that's what I was saying you, that there may be some pockets they are very strong, like Bank
Very
Mandiri.
strong.
If I remember correctly, even on the monthly charts, it's a long-term breakout. It's almost 5 or 6 years breakout, and the stock is not ready to go down with the market. So even on the weekly chart, you see this 7.9% move past week. So, and 240 MA also sloping up, and the stock bounced back perfectly from the resistant and support zone and also the 40 MA. So it's a very strong chart, very strong.
And he is sharing the dividend this week about
Oh, okay. Maybe there may be
about
some news for
500.
this
Yeah.
statement.
BCA, BBCA.
So, bank Bechia, yeah, for me, yeah, that's a very strong uptrend. So, you see here, it's in a clear uptrend, but to me, like Mandiri has more opportunity as of now, because it's a long-term base consolidation breakout in case of Bank Mandiri compared to Bank Bechia. And Bank Bechia is, I mean, still the strong one, but it's kind of a you can't expect some fire shots from it, like going up 2x, 3x within a short period of time. Whereas Mandiri is coming up from us 5, 6 years long consolidation base. So I will place my bets on Bank Mandiri, or maybe I can have a basket approach where I divide my money in Beche and Mandiri, and then whichever performs better, I top up in the winner and selling some part of the loser or some part of the underperformer.
That's what. One more. BBRA, Bank
Okay.
BRI. Yes.
So Bank Rakyat. Yeah,
Bank.
so it's kind of maybe I have analyzed it
Not
before.
yet.
That's
Yet.
why I have drawn a line.
It's not.
So yeah, so if you see here, out of those three, Mandiri is so far the strongest one, because you see Mandiri has already broken out and moving up, whereas uh, BBRE is still hovering near the consolidation zone, the resistance zone. But yeah, still it's very close here now, tightening enough. So any point I will go long above 5100 or 5200 zone in BBRE.
In Indonesia, many of like investment advisor said that if you want to buy stock for your life, you can buy BBCA, Bank BCA. Do you agree with that? So just buy BCA at what price, at what time, like that. Do you agree? Just hold one stock for your lifetime, and BCA will give you like a big profit. Do you agree with this type of investing or trading?
So if you go by the past data of Bank BCI, it is in a very, very solid uptrend. But in technical analysis, it's the beauty of technical analysis that you have to adapt to the changes, because I can only be analyzing the stock for maybe upcoming few months to 1 or 2 or 3 year horizon. But keeping a view of throughout the life, especially when the technology is changing very fast, and there are dicey situations always on the global stage or even in the Indonesian capital market. So you should be monitoring your stock every 1 or 2 years. But for me, I say that if you are well expert in reading the charts, even have a decent knowledge, you can review your investments every month. So rather than having an opinion for rest of the life, I would suggest have an opinion for upcoming 1 to 2 years, and after that, if you feel your investment is performing as per the expectation, then you can extend your horizon for another 2 or 3 years. So instead of having the view for your life, break down that into smaller parts of 2 to 3 years, 2 to 3 years like this. And always be sure that these are the leaders that have already proven themselves. So if you want that, you want to catch the next Bank Bechea, you have to look for some other pockets also. So otherwise, everyone will be piling up into Bank Bechea. And same like in American markets or Indian markets or everywhere, it's there. Always you get the new leaders that are, as of now, smaller banks, but they have the potential to become Bank Bechea. That's where you will make the maximum amount of your money. So if you ask me, yeah, it's in a strong uptrend. So I would be buying it now if it is a fresh investment somewhere above 9,100, 9,200 level. And I will be holding it at as long as the trend is intact. So as of now, the trend is okay, but compared to like Mandiri, I feel like Bechea is still an underperformer so far compared to Mandiri.
So you don't a bit disagree if like if somebody have like a salary 5 million a month and he buy BCA 2 million a month for his children future, like maybe his children when 10 more years will be in university, so he buy BCA start from now every month 2 juta 2 juta 2 juta like that. What do you think? Because many financial advisor, many investment advisor in Indonesia, okay, for your children, for your, if you want to buy house 10 more years, 5 more years, just pay BCA every month 2 juta 2 juta like that, per million per million. No need
So
to
that's
stock.
so that's the actually that's what I'm saying. You first invest in your learning so that you can analyze your stocks yourself. Because at the time when there is a sell signal, no analyst will come to your house or call you to say you to sell your shares. Firstly, invest in yourself. And secondly, if you cannot learn this and you are a working professional, I would advise go through the way of mutual funds or ETFs, passive investment tools. No need to have focus on just one stock. Just
That's
have a basket approach. Go through the route of mutual fund. Do not come into active investing unless you are well versed with this subject, because it's like constructing your house. Your portfolio is like your house. You are doing it for your future insurance, for your family, for your house, for whatever goals you have. So never try to play with fire. So half knowledge is very dangerous. So go with the registered fund managers, those who can guide you towards the mutual fund investing, or invest some part of your salary to learn this first, because it's a very, very simple concept. There is no rocket science in it. You can invest 1 week or 2 week in your learning process, and so that you are now well aware of the technical analysis tools and jargon, and you can manage your own money. Mhm.
okay. That's good. Very, very good. Okay, let us see next about the IDX energy.
Okay, so it's IDXE, I am assuming it.
Yeah,
Okay,
IDX
IDX energy. Yeah.
energy.
If I open the weekly chart, yeah, the stock, this index was very, very strong. And I think maybe because that Indonesia is a commodity surplus nation having coal and
Yes,
nickel, maybe
and
that's why the IDX. So it was, it had a dream run from September 21 till almost 19 December, where it, I think, moved up almost around 187% on the index level. That is a very, very strong move. And now it is very natural for something that has run up 180% to correct now. So now you will be what you will be seeing, as per my experience, is volatility on this chart, because this had a very smooth ride. So all the participants that are sitting with heavy gains in those stocks, they will be looking to book their gains. So that is why you will see the chart will now become very loose, wide, and volatile. So unless it breaks 200 MA, and if you are an investor, hold on to those stocks. So individual stock analysis will be different as compared to the index, but as a general guideline, if you're an investor sitting with heavy gains, then observe where is the 40 period moving average on the weekly chart. If your stock falls below it, or even if the 40 MA flats down, you may sell partial positions and hold on rest with the trailing stop loss below 40 MA. And individual stocks may or may not be stronger than this index. So if they are very, very strong, I don't recommend you to book your gains now unless you have a sell signal at place. Mhm.
Okay. Can you search about composite?
Uh, it's IDX composite.
No, no, no need, no need. Just composite, just composite.
Okay, just composite. Oh yeah.
Yes, yes.
So
This is benchmark of
this is, I think, okay, Jakarta Stock Exchange. Yeah. So if you see, it broke almost around in almost October 21, and it didn't perform well after this breakout. So now it's very clearly very close with the close to the support zone. So the stock has respected this zone almost 4 times. But the only negative sign is that the highs are now getting lowered every time. So you have to bounce back and cross this region of 7,000 to show some strength on the chart, because it may again fall down from almost 6,700, 6,800. So the more times the support zone is tested, the more weaker it becomes. So you have to have, if you want to gain strength, then you have to clear the previous swing high. So the only negativity is that the highs are getting down. So if I can draw just a line for you, it would be like something like I will show you. So it would be like something like this if I draw a trend line. No, no, no. So that's my idea. So that's something like this is some sort of a descending triangle.
yes.
But the only negativity is that here, if it has some strength, it has to bounce back till the upper boundary. So the more it uh, spends the time near the support zone, the weaker it will be. So as of now, I would be patiently sitting on the sidelines. If this is the chart of a stock, I won't be buying this. I will be waiting for at least a breakout to the upper side.
Okay. How about India, Sensex, BSE, BSE?
So S&P BSC Sensex is, weaker. It has broken the 40-period moving average. Now, these 2 or 3 weeks were not so healthy. If you look at the daily chart on the index level, so you see here, we have this breakdown here. That's not 40-period moving average, but that's you see the 200-period moving average. So it has broken down the key moving average almost last to last week. So now we have bearish sentiment playing out. So it consolidates and then it consolidates, and in case if there is a breakdown, then we have like we are just sitting on the sideline, because you see this was a gap down opening and then it follows through. So it's a very, very weak chart. So if you see here now in here, so that's a 200-period moving average and that's a 50-period moving average. So anyway, the only trouble in this chart was if you look at the monthly chart, so I will zoom out for you. So this is some sort of a false breakout. So when it broke out and then you have a false breakout. So history says that false breakouts are very painful. So the stock may carry the momentum to the downside because bulls are trapped somewhere here. So we have a benchmark as well as Nifty, which is the top 50 stocks market cap. So equally weak. If you see same chart, almost equally weak, and it's very close to the support zone of 16,700, 800. If we break this zone, then we are heading for more trouble on the downside.
Okay, that's good. And how about S&P 500, United States?
Okay. So
for the last one.
1 second, I'll do something. I have a global view watch list already. So you see here now, so many of them, like they are now. So if you see here SPY now, I already had that target, but when it went down, it moved back up. So now you see here the stock, the index is now consolidating horizontally. So if we see a breakout to the upside, because this was definitely a bear trap here. So all those bears were trapped and it went up. So it indicates some strength here. And now we are very close to the resistance zone of 4100, 4150. So if it moves up, breaks out, we are good to go. And Nasdaq was also like equally attractive so far here. So with this double bottom breakout, and then it retested the support zone and moving back up. So all these indices are now at least very near to the resistance zone here. So, but if you see the individual stock charts, volatility is very, very high. So it is choking you from the both sides.
Yes, actually. Okay.
So volatility is chopping on the both sides. So it's better to just go in the market when your small testing positions are working. Otherwise, not.
Okay. Okay. At the end, what is your advice for the investor for short term, medium, and long term?
Short-term advice is that better to sit out, or as long as you do not have your minor testing positions working perfectly. It is advisable for short term to medium term, better to preserve your capital, protect your capital, because see now, if you compound your money maybe by 15, 17, 20% per annum, in 20, 25 years, you get huge wealth. But not everybody is able to do so. Why? Because they give back their profits in weaker market. So in weak market, it is very important to protect your profit that you have already made during the bull run. So that is why it is advisable to just sit out and protect your capital for short term to medium term. And because the more drawdown you have, the difficult it will be for you to come back. So, and for long term investment, those who are investing through SIPs in mutual funds, ETFs, that's a good time to top up your SIPs, double up your SIPs, because it's a basket approach that you are following. In the long term, the market will be healthy. So it's better that you invest either lump sum amount in your mutual funds or double up your SIPs in these volatile phases, because these are your times to top up, because when the stock market, when the stocks are correcting down, a fund manager taking care of your portfolio. So in those cases, like I always recommend to increase your investment for long term in mutual fund or SIP. But for the other stuff, maybe have some allocation to gold also, 10% of your portfolio in gold and silver, and remaining money to top up in your mutual fund and SIPs. And for active investment, it should be minimal at this time, minimal.
Yes.
So
I
you
agree.
should either be sitting out, just protect your capital. But if you have the itching to trade every time, maybe you can start with some smaller positions. And if they work, if they give you profit, then only you increase your allocation. Otherwise, just sit out. That's the only advice that I have.
Okay. 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 Thank you, Mr. Himanshu Sharma from New Delhi, India. Thank you for your time.
Thank you very much. Thank you very much.
Okay.
Always pleasure to connect
Okay.
with you.
Thank you.
Thank you.
A nice Sunday. Bye-bye.
Good day.